the current circumstances and the current environment under which significantly large auto companies already run. And in the listed space, of course, we're taking into account Maruti Suzuki as well as Tata Motors, keeping Hyundai IPO in mind. But with me, I also have my colleague Sajit Mangat, who's going to, well, help us guide this conversation along, of course, with my colleagues Puneet as well as Tushar. Of course, starting off, let's start off with, well, Sajit, what are we tracking and what are we going to talk about in today's day?
The filing of the prospectus of Hyundai has brought the spotlight back to the auto sector. We've seen some rally happening in some of the auto stocks like Tata Motors and others in 2023 and going into 24. But what is more important is the kind of expansion this sector is going to see, and not only from an investor's point of view, but also from the point of view of capex. So a rough calculation I was looking at, between Hyundai, Tata Motors and other companies, nearly $10 billion of capex is going to come in the next 2 to 3 years in this sector alone. That means the kind of expansion that's coming in, especially led by electric vehicles, which is there. And Hyundai IPO not only brings the focus back on here, because it expands the auto sector, and so the investment coming from global funds into it. But it's an auto IPO coming after 20 years in this market, and would perhaps be one of the largest IPO after LIC.
Well, so that's of course what we're going to talk about. But let's start off with the basics and let's talk about the size and let's get in Tushar in the conversation. Tushar, what are we keeping an eye on right at the top?
So we are essentially looking at, as what Sajit mentioned, was the size of the IPO is comparable to that of the LIC, which means we're looking at India's biggest IPO potentially.
Right.
On offer are 142 million shares out of a total of 820 million shares. That's equivalent to 17.5% stake in the company. What we have heard from sources is the valuation of the company can be anywhere between $25 billion to $30 billion.
Right.
But how big is Hyundai, so to speak, in terms of financials? In terms of revenue, Maruti Suzuki is actually double the size of Hyundai in India at this point of time, in excess of 1 lakh crore rupees last year. But Hyundai made about 52,000 crore in the 9 months that's been specified in the DRHP. The EBITDA margin that Maruti Suzuki enjoys is 8.92%. Comparatively, Hyundai is much better there at 9.1%. Again, these are the 9-month figures of FY24. Net profit is 9,536 crores as compared to 4,382 crores. In terms of operating metrics, sales, production, as well as exports, Maruti produces a significantly high, about 20 lakh units every last year, as compared to Hyundai's nearly 8 lakh units. Domestic sales for Maruti Suzuki were close to 18 lakh units. Comparatively is about a third for Hyundai at about 6.15 lakh units. Exports, again, Maruti beat Hyundai, 2.8 lakh units for Maruti, as compared to about 1.65 lakh units for Hyundai.
Right. Well, I guess the next question then naturally comes down to the valuations. Puneet, what can you tell us here?
Yeah, well, we look at other details as well when we include, Hyundai, as well as looking at how it compares to someone like a Maruti Suzuki as well. So we did speak on volumes of roughly 7,77,000 for someone like a Hyundai. Maruti had roughly 21.3 lakh units sold, so roughly 3 times that. Yeah. But when we see the margin picture, that's very interesting, because EBITDA margins, when we include, when we exclude the other income component, because Maruti has higher other income, we see that EBITDA margins were roughly 12.7% for Hyundai for, the 9 months that we spoke about in the DRHP. When we also look at, the share, EBITDA share for Maruti was roughly 11.6. So 110 basis point higher EBITDA margins for someone like a Hyundai. When you look at the PAT margins, here is where the differential comes in, where someone like a Maruti has higher profitability compared to Hyundai. And now that is because of 3 major reasons. When we look at, something like a depreciation to PPE, which is, how much the company has been depreciating on its assets, that is much higher for someone like a Hyundai at roughly 26.5%, as you can see on the screen, was someone like a Maruti is just around 17%. The other part is, which we spoke about, the other income. Now that is the key, positive for Maruti. It's a very big cash generating unit, and we see that roughly around 22% is other income compared to PBT, while 19% is for Hyundai. And finally, on the tax also, Hyundai pays higher taxes in India currently. We'll see, how it goes forward. But those are a couple of key data points which, lead to higher profitability for Maruti.
So given the fact that now the size of the company in terms of sales, which is there, in terms of number of units that they sell, how will you compare it with Maruti?
So when we essentially, look at just the overall valuation picture of both the companies, we do see that, Maruti is currently 4 times the net worth of someone like a Hyundai in India, roughly at around 80,000 crores. When we look at the ROE picture as well, that's also a very important aspect on the investments that Hyundai has gotten. That's roughly 22% for someone like a Hyundai, as you can see, versus 15% for Maruti currently. And the other 3 key ratios which you can see on total market cap of the company essentially. For Hyundai, right now it's at a higher price because the profits are a little lower for Hyundai, and that's why you can see that 45 times for Hyundai versus 30 times. But essentially on valuations, EV by EBITDA is also higher, while market cap to revenue, which is the price to sales essentially, is slightly higher when we compare it to FY24 numbers. But going forward, the picture does look very promising going ahead as well. We will be seeing new launches which Tushar will talk about. But the valuation as perceived earlier, that it's going to be extremely expensive and at a premium valuation to Maruti, that might not be the case essentially. And as we deep down into more of these topics, we will see why is that the case.
So, you mentioned about market cap to sales, ratio for Maruti at 3. So given that market cap to sales is around 3 for Maruti, and we assume the same multiple for Hyundai, what are we getting as a market cap for Hyundai?
So essentially, when we look at the market cap, as you rightly said, if we just take and extrapolate that to the numbers going forward as well, just taking the ratio of 3, we get a rough market cap of roughly 2 lakh crores. And how do they get to this number? We will get into that. But essentially, the price to share currently, this is just based on the assumption of what we have in the DRHP as well as on public domain. The share price comes around the 2,500 odd rupee mark, and we will come back to how the valuation picture comes back, detailing more into exports and other metrics as well. Yeah. But essentially, the PE ratio is around 36 times on the current FY24 metrics. Now, I want to get back into the certain metrics that you also wanted to highlight.
Actually, before we move on, and since we are talking about valuations, the other aspect that we need to consider here is growth. You're saying that Hyundai most likely could be ascribed a higher valuation as compared to Maruti or Suzuki in general. That means that I'm assuming that, sure, the margins are better off than Maruti, 100 basis points, but 100 basis points is not a very large difference. In that case, do you think that Hyundai's growth is superior to Maruti, or it has been over the past couple of years?
I think one important factor that we look at is, of course, the vehicle sales and how it's translating into financials. Yeah. Now, for sales, we've seen that roughly 25% of total volumes are currently in the export market for Hyundai, and that isn't the case. Like Maruti is around 10 to 11%. So they have become, like India has become one of the hubs to, look at regions like Southeast Asia as well as other Asian countries. When we see that, EBITDA margins are also higher for Hyundai currently, it is actually coming at a profitability of more units. And one last point that I wanted to highlight was the 60% of the sales in the domestic market is currently coming from the SUV space. So that is also a key point, because the average selling price is going higher for someone like a Hyundai, which also benefits the company in profitability as well as adding new regions. So we've seen that something like a Middle East and Europe has almost doubled from the share back in FY22. It's gone to 12% of sales now. So they are including newer regions as well as not coming at the cost of profitability. So they are exporting a lot more as well, and that should aid margins going forward as well.
Tushar, come in here. In market share of Hyundai versus some of the other players like Maruti or Tata Motors or a Mahindra. How is it faring there?
So essentially, as the IPO has come in now, the number 2 position that Hyundai has held for the past decade or so it's for it to protect. It has to defend this market share going ahead, because Tata Motors is close on its heels. So over the last 5 years, Tata Motors has grown its market share from a 5% into the FY19 to 14% now. Yeah. If you look at, as on 31st March, Maruti Suzuki was comfortable at 41.71%. Hyundai was at about 14.5%, and Tata Motors was 13.8%. So we are seeing that Tata Motors and Hyundai are very close, so to speak, speak. So once it becomes an Indian company, as an Indian listed company, that's number 2 position is what Hyundai has to protect rather than going for chasing Maruti.
Right.
Secondly, you have to push up exports because those are better margins. The other point is, of course, how the transition strategy that Hyundai has taken at this point of time. It's actually 3-pronged. So first is, of course, premiumization. About 67% of the sales are from the SUV space. They are better equipped in terms of technology, 6 airbags standard, so that's a good selling point, so to speak, something that Maruti has so far shied away from. So those things are working in favor of Hyundai. Again, like how it's becoming the export base. We remember that there is some amount of pushback for Chinese electric cars abroad, in Europe as well as US. So that's one gap that's opened up for Hyundai to fill going ahead in the EV space as well.
What about sub 10 lakhs cars? Because
that's a very interesting point.
That's a big
That's
area.
about a 49% market share in overall sales, in sales volume in India. So in that space, Hyundai has sedans, hatchbacks, SUVs, all of them. So we have a Grand i10, we have the i20, best-selling, the first premium hatchback to actually come into India. We have the Venue, we have the Exter. So between all shapes and sizes, the best-selling car that Hyundai has, the money maker, so to speak, is the Creta, which lies in the 11 to 20 lakh price bracket. That's where all the volumes come in. That's where the company makes its margins. Above 20 lakhs, we have the Alcazar, which is a multi-purpose vehicle, which is a 7-seater. Not so many volumes, but given how Hyundai is focused on SUVs, or an Alcazar, a Creta, an Exter, a Venue, all do their part in delivering those SUV volumes.
Right. Well, there's plenty of, conversation left around here, and we're running out of time, so we'll quickly run through maybe just 1 or 2 points more. Puneet, very quickly, share on exports, because that's something that even Tushar touched upon.
Yeah, I think we did speak about a little bit that currently roughly 25% of total volumes for Hyundai is coming from the export market. We've seen that India currently, of course, is the largest share, but they have been expanding their market share, as Tushar highlighted, in Europe, in Middle East as well. The share has gone up doubly, while for something like a Latin America, they have maintained market share. So exports is, of course, a big focus market for someone like a Hyundai. And within India as well, we have seen that, as we spoke about the compact SUV space, where there wasn't much players until Mahindra with the 3XO. That's a 6 lakh unit per year market. So that's a huge market where they have high market share as well, which is getting in newer first-time buyers as well who want something bigger than a smaller car. And this Exter and the Venue fits perfectly there. As well as the exports, the margins, of course, are much better for the company, and it's becoming a global hub right here from India to service other nations as well.
What is the EV play here, Tushar?
So the EV play here is that Hyundai is not selling as many electric cars as it would want.
Right.
Tata is way better at that level, and it's a future technology. We are moving towards that. So that's where Hyundai has to play catch up, and it has plans to do that.
Right.
So right now it has 2 cars, the Ioniq 5 as well as the Kona, which are very well above 25 lakh market. But as per the DRHP, there will be 4 EVs that are coming very soon. One of them is a mass market product, as well as an electrified version of the best-selling Creta. That is due, I think, in Q4 of FY25. So yes, they have lined up. It's, again, for Tata Motors' market share to lose, so to speak, when competition from Hyundai comes in, competition from Mahindra and Mahindra comes in, because they also have an aggressive battery electric lineup ready for them.
Right.
So the big question which everyone is asking, will it be expensive, right, Puneet? So can you give us an idea of how expensive will it be compared to Maruti or a Tamo?
So when you look at the current numbers, of course, we spoke about the higher depreciation and the lower profitability. So the current P ratio does cover around the 36 times for someone like a Hyundai versus 29 times for a Maruti Suzuki. But going forward, we might see some more changes in this particular manner. We will see how the company performs in this particular way. The other thing is that going forward, like PE is a forward-looking metric. 2 years down the line, we will be seeing, of course, the Maruti EV also coming in, but Hyundai is already present there. They've already seen what the market is, and they have a lot of products gaps that are already filled with the compact SUV with this. So we did have, as we spoke about, the back of the run calculation of roughly 2 lakh crores of market cap. This is an assumption of $25 billion of valuation for the company. We do come at roughly 2,500 per share, but we will wait for the company to come out with much more details on the price band, as well as how much are they raising in total. And finally, just one thing that I wanted to highlight, that Maruti Suzuki currently in India, which listed a couple of decades ago, the valuations are 50% higher to their global parent in Japan. Currently, Hyundai is coming at half of the valuation of their global parent. So it'll be very important to see how finally over the next few years, and this is much of a long-term story, what happens finally with Hyundai, how it gets accepted in the market, because the global play, of course, is one of the most important things, but the domestic market where India is becoming such a big market, and by FY30 we are expected to have 70 lakh cars sold in India from roughly 40 lakhs now. Right. So it will be a very important aspect for Hyundai getting listed here in India.
Okay, well, we've covered a lot of ground, and I'm sure there'll be plenty more to cover over the course of the next few weeks, even as we get more details with respect to the valuations on the Hyundai IPO. But on behalf of Sajid and me, thanking both Tushar and Puneet for joining us and giving us a lot of insights there with respect to the latest in the auto sector. On that note, we slip into a short break, and on the other side, we continue the conversation with plenty more on Hot Money. Stay tuned in.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
You have a missed call.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you
Welcome back. This is Hot Money. We get into the conversation. Raghvendra Kedia is the founder of Prosperity Advisors, who's joining us on the show. Raghvendra, good afternoon. Thank you so much for joining in. Raghvendra, just some moments ago, we were actually having a conversation around the Hyundai IPO coming through. We assessed, the valuations for Maruti Suzuki as well as Tata Motors coming into it as well. Of course, we aren't, we don't specifically know about the valuations because we're still a few weeks away from the Hyundai IPO. But in the auto sector, firstly, what stands out for you when it comes to the passenger vehicle majors like Maruti Suzuki, Tata Motors? Are valuations right? What is your view and your preferences? Of course, M&M would also come into the picture, I reckon, here.
So, good afternoon, NDTV Profit team. Broadly, if you see the entire auto space and focusing on the passenger vehicle space, if you see the last 6-7 months of monthly sales data, it has been on an upward trajectory. That's number one. And if you see the focus of the top three companies, listed companies, Tata Motors, Maruti Suzuki, and Mahindra, including their stock price, that has been reflected very well that they are focusing more specifically for Tata Motors and Mahindra from commercial vehicle space to passenger vehicle space. And there is a lot of restructuring going on specifically in Tata Motors in terms of spinning off their CV and PV business, going for their merger with their DVRs. So there is very exciting times ahead for auto space. In terms of valuation, we still think that there is a headroom for an uptick. And once the EV story unwraps further, once the India as a global player still is slightly behind its emerging market players like a China or a South Korea in terms of the presence of electric vehicle space. So that gives you some headroom in terms of the stock price for all the passenger vehicle space. could be Hyundai, the new upcoming IPO, Tata Motors, Maruti, and Mahindra would be exciting days ahead in the next 6 to 12 months.
Okay, on to the next subject that we want to address is, of course, the defense sector. Now, this one has been buzzing. It's been on a tear. There is no relent, in fact, and it does seem like anyone who tries to short these companies, well, they get their hands burnt. On the other side, of course, people who stayed with defense for as long as they have, well, they're reaping returns and laughing all the way to the banks. At the moment, in the latest, we understand that Hindustan Aeronautics has received yet another very, very large tender for light combat helicopters at the moment. That's the latest. And well, reports suggest, and we do not have a confirmation because we have not yet verified this, but reports suggest that this large order could be to the tune of 50,000 odd crores. And on the back of that, we are seeing Hindustan Aeronautics advance by another 5%. But it's not just this one, right? We continue to see gains in Mazagon Dock, Garden Reach, shipbuilders, as well as Cochin Shipyard, and these companies, of course, build ships for the Navy. We continue to see an up move in something like a Bharat Electronics, BEML is showing a lot of strength. So all these companies moving from strength to strength, no relent. Raghavendra, what's your stance here? What would you do with this sector at the moment?
So on the broadly Indian defense sector, we would just ride on our profits. It is something which the story has unplayed after 20 years or 25, 30 years. So we would actually hope that this story continues for the next 5 years. We have the same defense minister, Mr. Rajnath Singh, continuing with the defense ministry. So that's two positives, that he has done a good job. And there is a policy continuity in terms of the defense outlay. Now his prime focus, considering his latest statement, is the export from Indian defense companies. The last 10 years were spent by the shipbuilding companies, the aviation companies, to make stronger balance sheets and upgrade their technology. Now, and their major clients were the Indian Air Force, the Indian Navy, and the defense. Now these same companies, Hindustan Aeronautics, Cochin Shipyard, Mazagon Dock, are aiming for global contracts. So we expect the multiplier to significantly change and go for a re-rating. Let's say Cochin Shipyard currently has an EPS of 60 and at current price a PE multiple of 37, 38. What if the same company gets orders across Europe and Latin America? What if Hindustan Aeronautics get orders from Argentina, Egypt and Philippines, where they have already posted their bids? So now from an Indian defense client, their clients could be global clients, which could give them a global head start to the global listed players. So Indian defense sector is something which should be in your core portfolio. If you are holding them, enjoy and ride the profits. And any dip should be taken as a buying opportunity. Cochin Shipyard and Hindustan Aeronautics continue to remain our top picks in the Indian defense sectors for the next 3 years horizon.
Okay, there you have it. That's the view on defense. Unfortunately, we are out of time on this show. So I'm going to take a moment to thank Raghavendra for joining us and discussing two very important themes in the markets at the moment. Of course, as far as the Nifty is concerned, well, continuing to sustain about the mark of 23,500. And when it comes to the benchmark of Bank Nifty, that is actually inching even ahead at around 50,300. Well, the key question is that does it move towards 50,500 today? Remember, a related index, that is the Fin Nifty, is we're going to see an options expiry today, so you can't rule out a lot of volatility in today's day of trade. Well, there you have it. That's what we are watching out for at the moment. On that note, we wrap this edition of Hot Money, but lots more lined up on the other side. You're watching NDTV Profit.
Headlines you start your day with. What matters worldwide is now